Hello and welcome to the CNBC TV 18 special. I'm at the Apollo Tyres headquarters and alongside me is Neeraj Kanwar, the Vice Chairman of the company. Neeraj, always a pleasure to speak with you.
Nice to meet you.
Tell me, Neeraj, so FY16 was largely a tough year for Apollo Tyres. We've seen your overall top line, whether it's India, which decrew, Europe decrew. Are you more optimistic now about FY17?
Well, yeah, I am very optimistic. The first quarter has been very good. Volumes, I can talk about volumes. We've had a very good growth in India. We've had a 9% growth in truck bias tires. We've had around a 4% growth in truck radials, where we are clearly the leaders. We've had a very, very good growth in passenger cars, which is close to 30% in volume. These are all volume numbers. And in farm, which is already picked up. Last year, farm agriculture sector went through a very rough patch, where we've seen a very upsurge this quarter, last quarter, of nearly 80% volumes have gone up for Apollo in India. On the other hand, Europe is doing very good now. They've come out of their issues that they had last year.
Because last year your top line was down by what, 15%?
Yeah. No.
Or thereabouts?
2-3%.
Overall, for the full year?
For the full year.
Yeah.
So, first quarter in Europe, we've seen slight growth of 3 to 4%, which is good.
Okay, you have
and we are today coming out with new products, products for the European market, which are standing at top podium positions in test results in Europe. So that itself has given boost to the European operations. And so we are very, very optimistic going forward. There's a little lull in July just because of, I guess we had a very good quarter. But as OEs also, July has been a slow month. We are seeing now the surge coming back up because good monsoons are there. So all in all, I think the beginning of this year has been very good for us.
So we'll talk about the Europe market in more specificity in a bit. But let's talk about India once again, because clearly we are seeing the overall auto sales going up, which seems to be a really good year anticipated. Maruti has forecast above double-digit growth. We've seen commercial vehicle makers now have hit back their old highs that they had before the slowdown. So give us a growth forecast for your domestic business for this financial year.
Well, as you know, I'm a very optimistic guy. I believe we will have a double-digit growth for the full year for India. And I can say that because on the back of a good quarter that's gone by. A 9% increase in truck volumes for buyers and a 4% increase in truck radials is a good growth. I'm a bit cautious going forward because, yes, we've had a good run in the first quarter. We are having a good monsoon, and therefore I'm seeing a very optimistic second half of the year. I'm a bit cautious about Chinese imports that's coming into our country. That's a big problem that we have. Today, those Chinese imports have gone from 1 lakh coming in every month to 140,000. So it's only going up. It's only going up and up and up. So now today they own totally around 32 to 34% of the truck radial market. So the government has to put some duties on this which is coming in. If we are selling at 100, Chinese tires are coming at 50. They're killing the Indian manufacturing industry. So the Make in India brand, we want to create more facilities. We want to create more jobs. But if truck imports are coming in the way they are coming, and which are not best quality, so safety is another issue that truckers are going to face, or we as consumers are going to face, because we are driving on the same highways with not good quality tires that are coming onto the roads on heavy trucks. So I think the government has to see that in order to create jobs, they have to give us some rescue from this Chinese imports that's happening.
And the government has done that with respect to the steel industry. So they have actually come up with a minimum import price. And in fact, today the MIP expires, and perhaps the government will do something about it. So are you disappointed that the government has not sort of shown the same alacrity that they have shown for the steel sector to safeguard the domestic tire industry?
We've been taking it up for 2 years now.
Yeah, it's been a long time.
Various, and I've been telling you time and again. The Chamber of Tire Association is taking it up very strongly. They are now, the positive sign is that they have started investigation. So we are hopeful of getting a positive order. We don't know what's going to happen, but it's been 2 years. And why have you let the Chinese come in and take 35% of your market share?
Are you seeing that even your domestic investment plans are getting impacted because of this, especially when you're talking about the Chinese imports having increased 40%? So clearly, I mean, is that also inhibiting companies like yours to sort of go a little slower, be more cautious about your domestic investment plans, because a lot of that market is being eaten up by the imports?
See, I'll say one thing to you. As far as Apollo is concerned, we have taken an aggressive outlook where we are increasing our capacity in Chennai from 6,000 to 12,000 truck radials per day. It is at some level affecting us, but it really eats into the truck bias production because it comes at that price level. Though it's a truck radial, the Chinese, but it is killing the truck bias, not truck radials. So clearly we, standing at the top with a 28 to 30% market share in truck radials, we don't get affected so much by the Chinese because quality is also something, and a trucker wants a good quality truck tire. But I'm talking as India, I'm talking as a tire industry expert, I'm talking for creating jobs and for making Prime Minister's wishes come true.
And it's going to impact jobs in the long run if nothing is done.
I want to give you another dimension to this. It's not only our tire industry. If I start cutting down production, that means I'm buying less natural rubber. What happens to the natural rubber growers? I'm cutting their jobs. I'm cutting their supplies. So it's a 360-degree approach. If you're affecting me, you're affecting my suppliers, you're affecting my raw material supplies. It's not only the tire industry jobs, it's jobs all across.
Right.
And that is what the Indian government needs to understand and protect us.
Have you heard anything from the government? Because now that, as you said, that they have started investigation, at least,
Yes.
you know, that's a step, perhaps, from the tire manufacturer's perspective, a step in the right direction. Have you heard anything since?
No, we've not.
When was the last time the industry had some sort of a consultation with the government?
We are still waiting to hear. I'm very positive, given what we've seen in steel. I'm positive that hopefully that the government will see the dent that is making and hurting the tire industry, and they will make some correct positive changes in the near future.
You've said that you are doubling your capacity at Chennai, because currently your Chennai capacity is completely stretched.
Yes.
When do we see the enhanced capacity kicking in?
So we are hopeful that by October of this year, the enhanced capacity starts coming in, and it will go all the way into 2017, end of 2017. So 12,000 will start coming out towards the end of 2017.
So initially in October, then how much do you see your production?
It's a ramp up. So it'll go first to 9,000, 10,000, 11,000, 12,000. So slowly.
You know, tell me a little bit about the margins as well, because commodity prices have been going up.
Yeah.
You know, last year we saw you benefited because overall commodity prices were on the lower side.
Yeah.
But now that cycle seems to be changing. So in that sense, is there now concern that going forward it will be difficult for you to maintain the margins that you have?
I don't think for Apollo it's going to be such a problem. Yes, it is a challenge. Commodity prices have not gone up to that extent. But Apollo itself has taken a lot of corrective measures within our operations, may it be in terms of reducing overhead costs, reducing manufacturing costs, we're using alternate power sources. So all in all, costs have started coming down from a manufacturing perspective. Also, one critical thing is product cost itself. So using different raw materials, substituting different raw materials, all those technical enhancements, advancements to the product are coming in now. So that's the way we will keep up with our margins. I'm very bullish. Margins are looking good.
18% is, I think, what you had last
year was around 18.5%.
And which was good again because of the lower commodity prices.
So we are
will that be a challenge to hold that around 18% despite all the technological improvements you may do?
I don't want to future forecast, but I'm hopeful we will remain within the same margin.
Around 18% you're hopeful of that. Tell me, what do we expect now from your Europe business? Because you've said that a Hungary plant will be up and running by when? January 2017?
January 2017.
So what is your outlook then for Europe?
So we are on course as far as Europe is concerned. Today our facility in Enschede in Holland is operating at nearly 95%, so again overstretched. We are very positive about Europe because this is the first time that Apollo is entering global OEMs in Europe. So we are already into the approval stages with VW, with BMW, with various other companies, General Motors. So all these things are going to kick in 2017 all the way till 2018, 2019. Okay, so that in itself is a new journey for Apollo. Because Apollo has been selling OEs in India, but it's another different ball game when you are starting to sell in the European OEMs in Europe. And so that in itself is a new challenge for us, and we are very excited about it. With that, we will open up a new office in Frankfurt, in Ronheim, where we have around 25 engineers sitting, dedicated only to the OEMs. They're all R&D engineers, R&D center. It's a small subset of the main R&D center in Enschede, and we have around 25 engineers and
So this is a new R&D center?
It's a new sub-R&D center.
Where you've opened it?
Yeah, in Frankfurt.
Frankfurt.
Beautiful, and I just visited them. And they have around 10 test engineers who are testing all over the world, various tires. So that, primarily that R&D office is for OEMs. So I'm positive because of this new distribution that we start getting now. So once Hungary comes up, which is in January, then Hungary will be catering both to the aftermarket and to the OEMs. So it's a whole whole new ball game for us, a new industry that we are entering.
So there are a lot of things happening then for Apollo Tyres as far as Europe is concerned.
Yes.
You're also in touch, as you said, with with the OEMs. Have you, like, when do we when do you get a final answer from them?
No, we are already into approval stages. Some have already been approved. So you will start seeing by the next summer, we will be getting into Mercedes, like that. There are plans to get into VW, there's plans to get into Skoda, into GM. So they're all calendared wide, and all testing is happening.